I'm Susan Dziubinski with Morningstar. Low volatility stocks have proven their worth in 2025. The Morningstar U.S. Low Volatility Factor Index has outperformed the broad market this year. So, what are low volatility stocks? Low volatility stocks have historically offered more price stability when compared with other stocks. And while there's no such thing as a safe stock, low volatility stocks tend to hold up better during market corrections, though they also often lag in bull markets. Today, we're talking about the 3 stocks that are the largest holdings in Morningstar's Low Volatility Index. Investors who'd like to add some stability to their portfolios should keep these 3 stocks on their watch lists and consider buying when they're trading near or below Morningstar's fair value estimates. Microsoft is the largest stock by weight in Morningstar's Low Volatility Index. Now, technology stocks as a group have been hit hard this year, but Microsoft has weathered the storm better than many of its peers and is outperforming relative to the Morningstar U.S. Technology Index. Microsoft is among Morningstar's top picks in technology today. We think the company has less exposure to tariff risks than others in its sector. We also think the company has carved out a wide economic moat and, best of all, the stock looks undervalued relative to our fair value estimate. Berkshire Hathaway is the second largest stock in the index. Berkshire Hathaway stock has significantly outperformed the market this year. The company's massive cash stake and diversified portfolio have made it a safe haven that investors have flocked to in 2025. We assign Berkshire a narrow economic moat rating. We think that the huge and growing amounts of capital Berkshire must deal with will ultimately limit its ability to generate the outsized returns on invested capital that it once did. Berkshire Hathaway stock looks a little overvalued today relative to Morningstar's fair value estimate. Johnson JNJ is the final stable stock we'll talk about today. We think J&J has carved out a wide economic moat with its diverse revenue base, research pipeline, and exceptional cash flow generation. We recently reiterated our fair value estimate on the stock after earnings and incorporated management's guidance after assessing the expected impact of tariffs. And while President Trump has been clear he'd like to lower drug costs, we nevertheless think innovation and a promising mergers and acquisitions environment support long-term pricing power among drug makers. J&J stock has performed well this year and looks about fairly valued today. For more stock ideas, be sure to visit Morningstar.com.